What is inflation? Before we cover what inflation is, let's debunk what it's not. Inflation is not just an increase in the money supply. This is a popular definition online, but it just doesn't tell the whole story. For instance, we learned in our earlier videos about endogenous money and inside money that the money supply pretty much always expands in the long run. This ignores the supply side, so while we might be creating more money, it really depends how we're also using that money to potentially create more goods and services. Okay, so what is inflation? Inflation is the overall upward price movement of goods and services in an economy as measured by a basket of goods. The two main inflation baskets that the government uses are the CPI, which is the Consumer Price Index, and the PCE Index, the Personal Consumers Expenditures Index. The public tends to focus on the CPI, but the Fed focuses on the PCE because it's a little bit less volatile. So each of these measures also has a core index, which is basically everything minus food and energy. And the purpose of that is essentially to strip out extremely volatile items. So that, for instance, in 2008, you might have gotten a very, very high inflation reading from the boom in oil prices when in fact deflation was on the horizon. The BLS also provides a fantastic FAQ section on all of this that goes into extreme detail, debunks a lot of the mythology and sort of conspiracy theory stuff we read on the internet about all of this. So how is the basket measured? Well, the BLS is constantly doing surveys that reflect the average person's basket of monthly consumption. And they're including over 80,000 items that are included in the basket and updated regularly. Importantly, the basket evolves, and the BLS is trying to reflect the real-world substitution changes over time. You may have seen this chart going around showing that the dollar has lost 95% of its purchasing power over time, and it's true. But at the same time, the U.S. economy has grown into the largest economy in the world, the most dominant superpower in world history, and our living standards have boomed. So how is that possible? Of course, we don't leave all of our dollars under our mattresses. We use them to make real investments in the economy, producing goods and services. The value of this investment is best reflected in something like the S&P 500, which since 1927, $100 has grown into over $40,000. In addition, we earn a real inflation-adjusted wage in the long run. So we're not just taking in dollars that lose value, we're earning an inflation-adjusted income over time. So none of this means that inflation is necessarily good. And in fact, we know that very high levels of inflation are terrible. But it also raises the point that some modest inflation of about 2% per year is not inconsistent with strong economic growth and rising living standards. Yeah. We were technically over 3 minutes in this video, but we're using a core measure for time in this video. And adjusted for that, we were under by 30 seconds.